engaging users and telling them that the attack landscape is shifting from normal desktop to actually your phones.
Yes.
Because on your phone, one, you have your mobile banking. Any PIN, any password reset will go on your phone. You have your Gmail on your phone.
Yes.
So basically, if anyone is able to compromise your phone, they can reset your password, get the link straight from your phone.
Yes.
They can send the one-time code or one-time PIN to your phone, get it straight from your phone. They can do online banking by utilizing your phone.
Yes.
So the key thing here is to make more users aware that the phone is the next gold mine when it comes to attacks.
Yes.
Yes, and users should proactively put in steps, mitigation, to ensure that they're protecting their phones as much as they're protecting their phones, their laptops.
And we're going to come back to exactly what you need to do to make sure that your phone is safe as well, because that is the most, I think that's most pressing there.
Yeah, true.
Now, if you look at what the UN is actually saying, that is Kenya ranks among the lowest countries when it comes to being cyber security aware.
Yeah, true.
Would you actually confirm this and say that actually in Kenya there's something that is not ticking, and what is that is not really ticking?
It's actually true. Now, the misconception has been when people think of guys being cyber aware,
yes,
we think of Nairobi, the major towns, and they're like, okay, Nairobi is a representation of Kenya.
Yes.
But when you look at the statistics, actually most people with phones are not based in Nairobi.
Yes.
Kenya is very huge. You'll find that maybe Nairobi accounts for only maybe 20%, while the other 80% has been distributed in the rural areas
yes,
and other urban areas. Now, most of the focus will be targeted on Nairobi, mostly the major cities. What happens with the guys in the rural areas? Now, good example will be the fraud cases that happen for the M-Pesa.
Yes.
When someone tells you, please send me fare, send it to this number. These attacks are not successful with the guys in urban. They're actually successful when targeted guys in the rural areas, because these guys are not being educated properly.
I see now.
We are relying on social media, on Twitter,
yes,
basically to channel out this information. However, my auntie back at home does not know what Twitter is, does not know what Facebook is. The medium you're using is not sufficient at the moment to educate the masses.
Yes.
Yes.
Okay, so for you now, from where you sit, what are these most prevalent attacks online that you're actually seeing and say these are very synonymous in Kenya and you need to be aware of them?
Okay, now, the first attack that is very prevalent is basically what we call the phishing attacks.
Yes.
Where basically someone tries to get information from you, or someone tries to make you do an action by basically convincing you that it's a legitimate action.
Yes.
This is basically, think of the M-Pesa fraud we get. Someone tells you that you have won something, or someone tells you, let me say, a better example will be if you go to your Gmail.
Yes.
Probably you'll get a message, an email from someone purporting to have located you from a bank account somewhere, and then they tell you, kindly reply to this mail or send us your phone number for us to get in touch with you.
Yes.
Now, that's one of the most major attacks that we are seeing, because that process basically starts the whole cycle of someone stealing your identity, and from stealing your identity, before you know it, your SIM has been replaced.
Yes.
Before you know it, someone is withdrawing funds from your M-Pesa.
Yes.
Yeah.
All right, I just want us to go back again just a bit and concentrate on the mobile phone, because that's exactly where majority of Kenyans are now.
That's true.
Because we know the convenience that comes with mobile phones, therefore. So when you're going to concentrate, therefore, on this awareness, what are going to be your specific areas, really, in terms of now making these people aware that you need to be aware of these cases when it comes to using your mobile phone?
Okay. Now, one of the main issue actually concentrating on is, I believe, almost 100% of users on social media. Social media mostly targeting WhatsApp, because a Kenyan might not be on Facebook or on Twitter, but 100% sure they'll be on WhatsApp.
Yes.
Now on WhatsApp, we have gotten these forwarded messages. Someone telling you, click on this link to get 500 free MB.
Now, isn't it?
Click on this link to get, I don't know, a t-shirt, to get a promotion, something that's not there. Or click on this link to get, you'll be redirected to a job site. Now, all these links, we have looked into them, they're all malicious links. This is basically someone redirecting you to a link and hoping you'll be able to download an application that is enticing to you. We call it the stick and carrot. So basically someone is sticking a carrot to you, hoping that you'll take the bite and swallow and maybe install a malicious application on your phone. So basically what you're telling people is that, one, stop randomly forwarding every message you receive on your phone. You should be able to try bare minimum, validate. And how do you validate this? If I'm getting a text that I did not solicit for, the safe bet is here is discard it. Do not forward it to someone else. I see. Yes. That is actually, if you have gotten any forwarded message, forwarded video, any link that you did not request for, or maybe coming from a foreign number, discard it, because that usually starts the whole cycle of someone infecting your phone. Yes.
We've made a lot of technological advances as an economy in Kenya.
True.
And so for you, when you look at it, therefore, because everybody is saying that Kenya is actually now moving technologically frontwards.
Yeah, true.
From where you sit, have we let this gap expand so much to the point now that we are looking back and saying, I mean, we have 29.5 billion that we've already spent just on cybersecurity issues as an economy in 2018. Are you saying that probably now this money therefore should be invested in mitigating these issues as opposed to now coming up, I will call them firewalls, for the sake of this conversation today? Would you say that we need to change the shift, that as opposed to mitigating them now, let's therefore reinvest therefore in actually stopping them before they happen?
Exactly. Exactly. 100% agree. Because you see, your normal user won't need a firewall. Your normal user does not need a firewall. Your normal user just needs to be told what to look out for, what to be aware of, to ensure that they're not being infected or someone is not taking advantage of them. And I'm very glad that you mentioned the CA event that is happening today, because CA has actually noticed this. And in one of their programs,
considering CA has been hacked as well, by the way, they've been hacked.
I'm
very sure you do know that, isn't it? They've been hacked. Their website was down, was it last year? For a couple of days before they had to reboot their servers and actually get it running.
In regards to that, the main thing to point out here is that with all security, you can have all the tools you want, but if you're not educating your users, you're not going to make any headway. The key point now from 2018 has been, you need to educate your users. You need to make your users aware of all the attacks they might be facing and how to prepare and protect themselves against such attacks. If you're not educating your users, you're not going to help them anywhere. It's like what? Buying a Lamborghini for someone who doesn't know how to drive. Even if the vehicle has all the safety features, this guy will crash it at one point or the other.
Pretty much, isn't it?
You are better off taking this guy to a school. Basics of driving 101. Then later, get him this Lamborghini, and he'll make good use of it.
Isn't it?
Yes.
All right, I just want us to talk about, I don't know whether I'm going to get the correct term, is it ESET, isn't it? How does it work, Lawrence?
So ESET is basically an endpoint protection company. And I think actually it's very good you mentioned ESET. ESET is amongst the few companies that actually allowing Kenyans to buy some of their products online using M-Pesa. So I think the link to go to is shop.eset.co.ke. So if you go to the ESET link, you will get various security products for your standard user, for your normal users. Products that will help you encrypt your phone, products that will help you manage your passwords, and basically increase the security profile of your phone at a very pocket-friendly price.
And do you think that most Kenyans are actually aware that you need to go for these security devices like ESET just to secure your phone?
No. Most Kenyans are not really aware.
Because they've not been told, isn't it?
They're not being told.
Yes.
And they're not being educated, which still brings me back to the issue of user awareness.
Yes.
Most Kenyans are treating their phones, not even phones, their portable computing devices,
yes,
as a tool for accessing the internet and calling and receiving text. They keep forgetting that this is a computing device that needs to be given the exact same protection you'll give a computer.
Yes.
The interesting bit here is that when you set up any computer for any user, first thing they'll ask you is, does it have an antivirus? Because users are aware there are viruses out there.
Yes.
But the mindset right now is that these viruses are only limited to the laptops.
Computer, isn't it?
Exactly.
And laptops.
Yeah.
Yes.
The mindset should be shifting right now to, even if you get a phone from the seller, reseller, ask them, does this phone have an antivirus? Because right now we have antiviruses that are specific to phones.
Yes.
Very specific to phones.
And another term that we really want us to talk about this as we clear this conversation this morning, Lawrence, is even issues to do with security updates from these service providers. Yeah. How important are they for us being secure online?
Very, very important.
Yes.
Very, very important. I'll give you a scenario. I think last year, there was this security vulnerability, which is basically a weakness in a phone, which basically allowed anyone to gain remote access, which is basically someone is able to access your phone by simply sending you an image.
Wow.
Yes. Now, this was an issue affecting Android devices.
Yes.
Now, for you to fix this issue, it required the manufacturer, for instance, if you're using a Samsung, if you're using Techno, to send you updates. We call them over-the-air updates.
Yes.
Now, what's happening is that for certain phones, for certain manufacturers, they're not doing this for users. So, irregardless with this vulnerability, if your manufacturer is not pushing updates for you, you'll still be vulnerable.
Isn't it? Or if you have a phone that is pretty much not able to receive those updates, therefore, isn't it?
Exactly.
So you become vulnerable.
Yes.
And these are the issues that you really are going to focus on, I hope, as you continue this week.
Yes. Just to add on top of that, I think right now there's a shift. A lot of now manufacturers are actually allowing you to update your phone.
Yes.
So you can update from, let's say, Android 8 to Android 9 to Android 10. A few years ago, this was not there. However, not all users are aware of this.
Isn't it?
Yeah, because people, some users are still stuck in that mindset that I can't update my phone without going to buy.
Without going to buy a new phone, isn't it?
Exactly. And now these are the issues that CA should continue pushing the user awareness and tell users that, yes, right now, you can actually update your phone.
Yes.
Because I know guys like Samsung, Huawei, even the Techno, they actually push monthly updates. So at times, your phone will notify you that there's an update for you.
And you need to update it.
And you need to update it for you. Yes.
All right, Lawrence, just as we clear this morning, do you think, as an economy, that we actually start to realize the importance of these issues around cybersecurity, and are we going to get there finally?
I think as an economy, we're actually realizing this.
The painful way, you would say?
Yes. Unfortunately, the painful way.
Yes.
Unfortunately, the painful way. There isn't a day that passes without us encountering a case where someone is complaining somewhere that someone has transferred their money from their bank. Might be Equity, might be KCB. But I'm basically telling you that yesterday I went to sleep, I had X amount of money. Today my bank is clean. We have seen this DCI being very active with the arrest.
Yes.
Now, all this is basically telling people that we have guys out there who are out to make riches from your negligence. And this is making people aware that if I'm not doing anything to protect myself, there's someone out there who will hack me and transfer the money.
Yes.
So the money issue and people being afraid that their money will be stolen from their internet banking is actually now helping the case. Because right now, we are seeing an interest in people. People are asking, how do I protect myself? What can I do? So as an economy, we are making baby steps, but we are definitely heading there. In a few years' time, the statistics from UN and ITU will definitely
be different, isn't it?
They'll be different.
We're hoping so, isn't it? Lawrence, thank you very much for coming this morning.
Thank you too.
All right, that's exactly how it is. Now, you should be asking yourself, how secure are you online? And do you know the importance you should be aware. Start asking questions. Start talking to Laurent. You want to speak to him? We can link you up to him. All right. We take a short break here on Business and once we come back, economic review.
Focus of body and mind is crucial for a productive day.
Work on the obliques.
We look at trends that affect your business day.
Who has a bird's eye view of the whole economy?
These are things that the government should be able to spell out for Kenyans.
An in-depth analysis of the markets.
Markets have been very fearful.
Deploy the capital into investment opportunities.
Business headlines covered extensively.
71 years.
Inspire the whole spectrum of entrepreneurs.
I maneuvered in the harsh economies and all that.
With financial and business literacy in a language easy to understand.
At the simplest form, contracts. The creation of the human mind.
As we look at the boss lady in her element as a woman and a boss.
That women can have access.
As we journey you through farms and produce markets.
This is money.
Taking a breather and even in that, learn a thing or two.
Global map of growth rates.
Taking a look at the business of entertainment.
Movies, fashion, beauty.
Following the money in sports.
Then you widen your stance.
Before switching off our mics and let you have your say.
The economy is undergoing a serious hardship.
Looking at technology as it affects your day-to-day business.
The customer will get notification.
This is Metropol TV.
Boss Lady quote of the day: success is only meaningful and enjoyable if it feels like your own. This quote is by Michelle Obama.
It's agriculture that supplies food for the masses as well as raw material for agro-based industries. But what does it really take to grow the crops or rear those animals? And how do you ensure produce becomes profit? Journey with me, Fred Makori, on my farm visits.
And this is the Farm Journal.
And my colleague Victoria Amunga,
Kwa kilo nausaga 200.
as she brings to you the market opportunities. And together, we take you through the journey of farming for profit.
You ask me what business is, I'll tell you its numbers. Profits are numbers. Losses are numbers. Sales are numbers. Everything in business is numbers. So once you begin to understand the importance of data before you make that business move, you'll fully begin to appreciate Metropol TV's database programs. My name is Simba Elijah Charles Kiage, and this is Metropol Television.
Why is it important to start your business defeat? Because business is demanding. your body needs to be ready. Successful business persons always seek to help first before the money. So join me, Douglas Karanja, on Shape Up every day at 6 a.m. on Metropol TV.
There's no news story that is in touch with the needs of the audience like a business news story. Therefore, as a business anchor, it is in my mandate to understand the source of the story and, most importantly, consequences of the story. Which means before I take that script into my hands, I have to be close to the story. I have to experience the story. Or simply, I have to live the story. It is Friday, the 5th of July, 2019. It's 1 p.m. So welcome to Metropol News at 1. My name is Nina Shaban.
In journalism training, only 5 viewpoints matter for a proper story. My experience as a business journalist has, however, taught me that there is more. So now I understand that before I walk into that interview, I have to look for the hidden. So for me, what sticks is the story behind the story. What would you say is that unique, very unique selling aspect that you can guarantee I will not find anywhere else?
Good question.
My name is Ingrid Nantege, and this is Metropol Television.
Hi guys.
What does it take to run a business that succeeds?
What does an entrepreneur need to do for his business to scale up and outgrow his dreams?
What does a CEO need to know to make a decision?
What exactly makes the stocks move up and down?
Strategy, insights, innovation, growth, leadership, analysis. In an economy that's fast-moving, we are ahead of the game. Armed with data and analysis, we delve deep into the numbers that count, with analysis on key sector and company performance. Join me, Terry Ann Chebet, on the first of its kind in East Africa, a show that unpacks industries, speaks to business leaders, decision makers, the movers and shakers who steer our economy. The Capital Point, at this time only on Metropol TV.
When you hear the word business, what comes to mind? Skyscrapers, fast-moving economy, technology and innovation, dollar versus the shilling exchange rate, financial markets, or better still, the US versus China trade war? Is there a magic bullet that can spark Kenya into economic growth? How about this? How is Africa the next economic frontier? What does that even mean? Questions that keep popping up. Is foreign aid helping Africa develop, or rather is it stagnating it? Does good politics translate into economic development? Well, on Metropol Debrief, we break down business, telling you why it matters and showing you how and when it affects your bottom line. This and much more on the new season of Metropol Debrief at 8 p.m. where we're bold and balanced.
Businessmen are doers. Businessmen, they're also thinkers. Businessmen are innovators. How did you come up with this idea? How did you decide to give back to it? And where is the need? Where's the gap?
It was a natural gravitation.
So the doers, the thinkers, and the innovators all catch up on the Entrepreneurs Lounge with me, Ingrid Nantege, every Monday at 7:30 p.m. only on Metropol TV.
Welcome back. The man that we've been waiting for is actually here, so it's up to me to go say hi. Washington, thank you very much.
Long
Everything
time.
is good? It's been quite some time before you and I actually have spoken.
It's been, I'd gone to plant.
It's been,
it's raining.
Yeah, it's raining.
So I'd gone to plant some maize.
This is the perfect time to do that.
This is a perfect time.
To do that.
At the beginning of the race.
Yeah, a lot of things happening in the economy though. All right, let's just use our 10 minutes now to actually go through a couple of them and then see exactly what we got this morning. Anyway, now, a report on Kenya's best employers. I mean, top 10 companies to work with. Washington. I mean, I'm not going to really settle on this issue. At this time, when everybody knows that corporate earnings in that sector are actually neither here nor there, does it surprise you that 90% of Kenyans actually want to move from where they work and go next door? Is it greener pastures over the other side, or just a picture that we've not seen yet?
And I think that question is very, very apt right now, because I think it's a question of millennials.
Yes.
Millennials, there's this aspect of millennials are very, very uncomfortable staying at one particular place for so long.
Yes.
They feel like the world is changing so fast, they might miss on something if you stay on one particular company.
Yes.
So you stay here for 6 months, that 6 months is another company, and apparently, they keep on getting these jobs apparently, you know? And the guys, and the millennials who are good are very, very good.
Yes.
They're very, very sharp. But when you come to working, I mean, which kind of companies to look out for, there's a lot of parameters that you look at.
Yes.
You know, how you treat your employees, the prospect for growth of the employees,
Yes.
you know?
Yes.
Even you yourself, what are you looking, because at the end of the day, your culture should be employee-based.
Yes.
You know? If you don't look if you don't look after these guys, like you've just said, they'll move on to the competition very fast. And remember also, the competition is also, it is very, very competitive right now in every sector you talk about. It's very, very competitive. And people are catching up in every, I mean, look at, especially because of the growth of technology.
Yes.
Technology is making everyone to be on their toes all the time. And everyone is saying, if you don't catch on to technology, then you're going to be left behind.
Yes.
And you won't grow, so to speak, right? So the same thing with employees. If you get employees who are good, then you've got to make sure that you retain your good employees.
Yes.
Don't let them leave. Because I've been seeing this aspect so much. It's not like the early 2000s or like the late 90s. People get into a job and hang around.
6 months.
4 years.
Yeah.
Yeah. Nowadays, 6 months.
6 months, 5 months is good enough on a CV. So, but when you look at what millennials really need, is months good enough for your CV? Can you push it to a year, probably?
Well, I don't think they really look at that.
All right. I just want us to cross over to the next big issue also. NSSF is actually in headlines today. Now, the balance sheet of Kenya's pension fund hits 224.2 billion amid queries. The balance sheet of the state pensioner National Social Security Fund increased in size to 224 million, all right, and 224 billion and 24 million and 782,000. Now, at the close of the financial year ended 30th June 2018, this is compared to just 198 billion 537 million the previous period. It is developed property investment portfolio also grew to 21.8 billion in 2018 compared to 20.8 billion the previous year. Now, according to a abridged financial statement for the year ended 30th June 2018, the pension fund posted an operating surplus of 22.2 billion in 2018 compared to 18.6 billion in 2017. Now, contributions receivable increased by 5% from 13.6 billion in 2017 to 14.4 billion in 2018, while benefits paid out rose to 3.78 billion in 2017-2018 compared to 3.661 billion the previous financial year. Well, while the NSSF has posted a surplus, numerous queries from the Office of the Auditor General puts a damper on the fund's financial performance. Amidst numerous audit queries, the pension still hit 224.02 billion. All right, what do we make of this increase? Is it good management, or is it just a case of wait for the auditor to tell us exactly what is going on? Washington.
You know,
those are good numbers, though, isn't it?
No, the numbers are good.
Yes.
And there's something I keep on saying, Simba.
Yes.
The numbers would even have been better.
Yes.
But look at the kind of scandals, the kind of corruption, the corruption web at NSSF. You know, anything about NSSF corruption is about billions.
Yes.
Billions were lost here. Billions were lost there. They're building houses that don't get finished. I mean, they get into projects, billion shilling projects that never finish up, right?
Yes.
We all know directors of NSSF have always been taken to court because of corruption.
Yes.
You know, and you see, there's always there's something about these government and figures. These government have a tendency of showing rosy figures in every kind of government department,
yes,
or in every kind of ministry, so to speak.
Yes.
So now, because you see, the 224 we are talking about, they are surrounded in so many, how can you say, complexities.
Yes.
So many contradictions that among these 224 billion, it looks like it's just money on paper.
Yes. On a good note, though, the deposits have been increasing. Is that more Kenyans are actually realizing the importance?
You see, what I'm saying is this.
For the retirement?
You see, yeah, it's a good thing.
Yes.
And Kenyans have been doing that all along.
Yes.
But where does the money go to? Here, if you look at the 224 billion, Simba, what I'm saying is this.
Yes.
That you find the Auditor General is asking there's money that has been factored in that has not been deposited in SSSF.
Yes.
You know, there's a money that was deducted from the workers' salary, supposed to be taken to NSSF, haijafika.
Yes.
That means, that's what I'm saying, this money is just on paper. There's some money that has been factored in there that the NSSF is owed over years.
Yes.
The money is not there yet. That means if you got down to the basics, that money is not actually there.
Yes.
You know? And that's what the Auditor General is talking about. And that's the same thing I've said. This government to throw around figures, you know? But when you come to the nitty-gritties, you find the money is not actually there. You know? Maybe I can even go further and talk about this economy.
Yes.
I mean, I was reading something very funny yesterday. This government talks about the economy in terms of graphs. You know, the economy is moving up so much, but you go to the ground, people are not realizing where this money, how this economy is growing.
Yes.
You know, so can you really trust what the government is talking about? Can you really trust these figures?
So the only positive thing that we can actually talk about there is that, well, the deposits have been increasing to NSSF.
Wow.
If you look at from 2018 to 2019, I mean,
they've
increased by 3 billion, and that's a good thing. Kenyans are saving for the retirement.
It's a good thing.
Yes.
But the point is this.
Yes.
Is the money reaching NSSF? That's a nice scandal in the making. Wait for it.
Yes.
Yeah. Where's the money that we are told that, where's the 224 billion? We hear about 15 billion has not been deposited in the accounts. It's gone with the employers or it's gone with whoever.
But if they're getting a return on their projects, then that would be a good thing as well for the whole.
Listen, the NSSF is a good scheme.
Yes.
This government has very, very good schemes,
Yes.
by the way. But they always get mixed up. They always get muddled by corruption.
I see that.
You know? NSSF has so much money. NSSF, I mean, everything you talk about in these countries, this land is owned by NSSF, this building is owned by NSSF. They invest in so many things. But the point is this.
Yes.
Some of things, projects they get into, they never even get finished.
Yes.
You know, I was reading about the Nyayo Estate at Embakasi. Nyayo Estate, a Chinese company was given the contract by NSSF to do about 340 houses. So far, it's only about 42 houses that have been completed.
Yes.
You know, about how many billions? About 40 billion was paid to this company to complete the houses, but it has not. So far, down there, I mean, since 2014 to date, about 42 houses have been completed. That means NSF is at a risk of losing about 40 billion.
Yes.
That had been paid to this company, and it hasn't yet completed the project, right? And that is just an example. There are so many others that are happening in this country, and NSSF doesn't seem to get its house in order.
Yes.
You know?
Do you think that the Auditor General is done enough in really pointing out where these mistakes are when it comes to NSSF?
Yeah, I mean, the Auditor General is doing his work, so to speak.
Yes.
And that is what he's supposed to do.
Yes.
You know? And let me tell you, we also don't need an Auditor General who's scared of the executive, so to speak. You know? Because Auditor Generals, most of them, they apart from Moko, the one who left the other day, most of them, they've really been chickening out, and they've really been painting a rosy picture of corruption in the government, so to speak.
Hopefully we get a stronger one this time around.
Yes. I wish we do. I wish it would be so nice for us, man.
Yes. Yeah. All right, I just want us to, okay, this is a big one now, isn't it? ESCC approves Telkom Airtel merger. Now, the Ethics and Anti-Corruption Commission approved the Telkom Airtel merger. The commission earlier questioned the merger over the possibility of public funds lost at Treasury sought to convert its loans in Telkom to equity. However, ESCC failed to pursue the matter in question, saying the matter involves two private entities where the government owns 40% of the shares in Telkom Kenya, whereas Helios owns the majority 60%. According to ESCC, that means that Telkom Kenya is not a state-owned corporation, as Parliament implied. Therefore, Telkom cannot yield to ESCC questioning under the State Corporations Act. Good. But that's not it, Washington. I mean, everybody knows that that's not it. Because the question is, I think we've seen it develop.
Yes.
Safaricom did say, we cannot go on with this merger because these two companies owe us money. As it turns out, that's not the question now. I think now the conversation is, well, is this a private entity or a public entity that we're talking about here? As it turns out, government's 40% versus 60% is not in question. But I just want us to go back to where it started from. Just the other day, Parliament was actually pushing ICT, Cabinet Secretary Mushero, to actually come in front of the committee and answer to questions why he did not treat Telkom Kenya as a department of the state. Now we've seen the conversation is changed. Now we're getting, is telling us, I think Parliament did say that this is not a private entity. Those are two contradicting statements from Parliament and EACC at the same time. Do you see this as something that has to happen? Whether Safaricom or whoever has interest in it likes it or not, because at the end of the day, the government does know it's a dead company if Airtel doesn't come up.
Well, you're very, very right.
Yes.
Because at the end of the day, Telkom, I don't know where Telkom got it wrong with this technology thing. Because remember, Safaricom found Telkom still here with their booths, still dialing in those metal things, those metal rooms. So, to a certain extent, Telkom was caught napping when technology started coming up, right? And some of them haven't gotten their house in order. But it actually usually happens with the government projects, so to speak. Because the government, like we say, the government is not spending its own money. It's spending our money, the taxpayers' money. So to a certain extent, it can misuse or it can spend the money in any way it wants. It can waste it, and no one seems to come up with any complaint, so to speak. I mean, according to the government, just impunity, so to speak. Well, in the case of Telkom, I guess Telkom has got its own numbers. It's got its own part of the market share. And we believe by linking up with Airtel, well, Airtel, I guess it's also done its homework by getting together with Telkom, right? But the issue of whether Telkom is a public entity or a private entity, well, if you read the story of Telkom and how it has actually come to be 40%, you find that Telkom, about 20% of their shares were, Orange was also in the mix at one time. So Orange, the company, sold about 20% of its shares to Helios. So the resulting figures are Telkom has 40 and Helios has 60, right? But then you wonder, what was the rationale behind doing that? Behind selling the Telkom shares to Helios, so to speak. Does Telkom want to actually get out of this market? Or whoever sold the 20% shares, because it's Orange actually that sold the 20% shares to Helios, so that Helios now can have the majority shareholding. So that now we are talking about it being a private company. I don't know how that has come out to be. That it's become. I mean, the fact that it has minority shareholding. I think it's still a public company.
It's still a public company, and that's what people don't really want to talk about here. Now, do you think ESS is giving it a green light? That's fine. Do you think CA is going to also give it a green light? Because we do know that Safaricom wrote to CA and told them that we do not understand why this bigger company, the smaller company, has bigger frequencies than a bigger company, isn't it? And this too owes money. Other than just the debt factor here, do you think the CA is going to read from this and say, well, I think we have no way other than just
that's a question that's a question we are asking right now. How is it, just because we've got minority shareholding, do you see it being a public company? Now it becomes private. Who are the shareholders of Telkom? On their side. So what we say now, it's a private company. There's something there's more explanation that we need. Because you see the problem, Simba, is this. We don't get the explanations that are supposed to be done. We just give statements, it becomes a statement. And you're supposed to ride with it. You're not kind of supposed to dig deeper. Because the fact that Telkom has less shareholding doesn't mean it is not still a public entity. Or who are the directors now?
Yes.
Maybe you can tell me.
Yes.
Who are the new directors of Telkom?
I just want us to cross over to the next issue that we have this morning, Washington. Now, I just want us to look at this. Good. Kenya's BRT system, the 23 billion boost from European lenders. That's another lending. I mean, we got to have a look at it from whatever perspective that we talk about it. Okay, now lenders, now the European Investment Bank, the EU, and the French Development Agency will avail loans and grants to enhance the country's transport system. Now, the European lenders have pledged to provide up to 23 billion to support Kenya's bus rapid transport system. Now, EIB will avail a loan of between 5.8 billion to 11.5 billion shillings to Kenya for the transport system. Additionally, the European Union will offer a grant of 5.2 billion. Lastly, AFD will provide the remaining amount. Now, Kenya's highly anticipated BRT system expects to cut traffic jams significantly. For instance, the recently launched JKI West Lands Expressway's BRT system will move as many as 28,000 people each day. Good. We can look at it from different perspectives, Washington.
Yes.
We can celebrate from different perspectives, but what stands out there is another loan. Despite the grant, that's fine. Africa Development Bank will also come in and actually try and push it, but we're talking about other loans as well, from areas that we didn't really anticipate. Because remember, and I want to take you back just a couple of months ago when Isuzu came out to tell us we can give you the solution to your BRT transport system.
Yeah.
It was rejected. The buses were rejected.
Yeah.
They say, we don't like your design. I don't think you meet the quality that we need here. Do you think, Washington, that's fine. We are crying of traffic jams within the city. That's fine. Everybody knows it's a problem. That's fine. But do you think we need help really, really as an economy for us to have this system?
We do.
Washington?
And let me tell you something.
Yes.
Simba, something so embarrassing about this country.
Yes.
Is this. I remember in the Vision 2030, remember, all this has been taken care of.
Yes.
Even including trams.
Yes.
Trams that are supposed to get into the city of Nairobi. So people are supposed to, not even the buses now.
Yes.
Talk about the trams, you know, those electric things, on rails.
Yes.
Those cars on rails, they're supposed to get in the middle. I mean, they're supposed to use traffic jam by getting into the CBD.
Yes.
You know, that's always been factored for.
Yes.
But now, and the money even provided for that.
Yes.
But the biggest problem is this, something that you need to understand. Kibaki's tenure, he provided for all the money, for all those projects, for the Vision 2030.
Yes.
But I'm telling you, within Kibaki leaving the scene, within 5 years, there was no money.
Yes.
All the money was misappropriated. All of it.
Yes.
So, you get into this country, scandal after scandal, money being siphoned out of the the central bank, so to speak, out of the country's coffers at any one time. Now, when you come to the BRT system, it's a good thing. But you see, the biggest problem now is vested interest.
Isn't it? But can I ask you, Washington, can I ask you, when you look at the money that is really needed into this, I mean, we're talking about 5 billion shillings, we're talking about 11 billion shillings, we're talking in terms of billions. Do you want to tell me that there is no local investor with the capability to actually come and get into this investment without Kenya necessarily having to run again to EU and other development banks for loans?
That's exactly what I was telling you about.
Yes.
You see, this money was there in the first place. You're not even supposed to be borrowing any money in the first place. Number two, what you said is very, very true. We don't need to keep on borrowing in this country. Keep on borrowing.
I don't know that every time we need to do something, then we borrow.
Yes, we have to borrow.
Every time we need to do something, then we borrow.
You know, and that is where, and you see the biggest problem, like I keep on saying, corruption has captured this country so much, such that you remember the first Eurobond money that was borrowed in this country. Remember the scandal around it? It never reached the country. Never reached the country.
The General did actually say that he raised that alarm.
Yeah, he said
after that he came and changed the story later.
You see?
Yes.
Now, even you see when you borrow this money, most of the times it doesn't get to where it's supposed to get to. You get it?
Yes.
And why do you keep on, like you're saying, why do you keep on borrowing? The other day they raised the borrowing ceiling to 9 trillion.
9 trillion, isn't it?
From 5, I mean, so what exactly is going on?
Pretty much within the figure.
Yeah,
I mean, they won't be committing any crime.
Yeah, it looks like.
Yes.
But you see, because that's what I'm saying. This government is just cooking figures.
Yes.
For it to raise to 9 trillion, they said that the economy is doing so well, we can actually accommodate more loans. You get it? Just playing around with figures and graphs and stuff and saying how well we're doing. Now, how visible is this BRT, bus rapid transport system? How visible is it? And how is it going to work? Because let me tell you, this is something so small. If the government wants it to work, it's so small, you know? But it's got to be made complex so that along the way, people are going to siphon money out of it, you know? And this is going to be made in such a huge project that people will be told, no, so we miscalculated. It was supposed to be 1 billion, but now it's 2 billion. You know, that's the story of this country, the economy and all that stuff. So you see what's happening right now on Thika Road? You have those red lines running along.
And they're actually now, I don't think they're there anymore.
They're even blurring now.
Yeah,
They've been there for the last 2 years.
The company that is actually repairing Thika Road just got the contract the other day.
Yes.
So laying gravel on it.
That's right. You see, those lines are still there. And you tend to wonder, why rush to draw lines?
Isn't it?
When on the ground, nothing has been laid on paper, so to speak.
It?
You know?
Think about it. Washington.
Yeah.
We're getting told we have to get out of the studio.
It's
been lovely this morning.
Yeah.
Yeah, isn't it?
Good to see you again, man.
Good to see you again, Washington.
Yeah.
Yeah, here's the thing. We check that cut, but not to worry. I'll be with you at 11, 12, and 1 p.m. today for Metropol News. But tomorrow, hope we shall get more time to talk about the economy, isn't it? All right, good morning.
Street Biashara, proudly brought to you by Equity.
Treasury bills acceptance rate, there was an improvement to 90.3% from 74.4% in July, as the Central Bank of Kenya accepted a total of 73.8 billion Kenyan shillings of the 81.7 billion Kenyan shillings bids received. Now, the term we're looking at today is, what is a Treasury bill? Well, let's find out what exactly you know.
Imetengwa kwa milandi yenye inaelekeza kusaidia wananchi. Kwa mfano kama Treasury bill imetenga pesa ya education, Treasury bill imetenga pesa ya agriculture, ya kilimo, Treasury bill imetenga pesa ya kujenga dams, vitu kama hivyo. Hizo ndio wanaelewa, hiyo ndio maana ya Treasury bill.
Treasury bill means what the Treasury owes. Basically their bill.
Treasury bills, I understand they are government securities that public can buy and sell.
Basically, it's the currency, like the 1,000 shilling notes, the 500 shilling notes, 200 shillings, 100 notes. Those ones.
Ni zile za parliament. Hii ndi expenditure ya government in the various things zenye wanafanya.
Treasury bill ni the budget, annual budget.
We've talked about exchange rates, interest rates, and we can't have an episode of Strip Your Share without talking about what treasury bills are. Now, after getting to know what exactly you guys understand, some amazing answers you gave me out there, it's time for us to get a clear understanding of what treasury bills are. And the individual helping me today on Strip Your Share is financial expert Mr. John Chieng. Thank you so much for joining me once again on Strip Your Share. Now, let's just jump right into trying to understand what is a treasury bill.
A treasury bill is a government debt security that is mostly issued by the central bank on behalf of the government that has a maturity period of less than 1 year.
Okay, wonderful.
Yes.
Now, why do longer tenor, T-bills attract more subscription?
Generally, is like when you buy a treasury bill, they usually issued at a discount. So you can determine the amount of money that you get when it matures. And usually the element of discounting. Usually discounted. So when you buy a short-term treasury bill, let's say 91-day treasury bill, the amount of return that you'll get there is usually less.
Okay.
Yeah. But when you invest over a long period of time, let's say 364-day treasury bill, the investor is compensated for the time value of money. Yeah, there's also the possibility that during that period, the interest rate in the market might increase. So they usually discounted better than a short-term treasury bill. So in that case, in simple terms, that the rate of return, the return that an investor gets on long-term treasury bill, usually higher than the short-term. That's why they usually oversubscribed.
Okay. Now, there have been recent allegations that the government has been promoting the appetite for T-bills. How true is this? And should the government's activity in the local market be capped?
I can say yes and no.
Why is that?
Yeah. I think what banks have done is that they're in a corner, and when you're in a corner, there's the interest rate cap. You have to make money.
Yes.
And you look at which is the best option. If I lend money to local investors, to individuals, what am I taking home? Are you seeing?
Yes.
Yeah, so they're just looking at where to make more money. That's why they're investing. So probably it's not that the government is promoting the activity, but they're just looking for a better and safer way to make more money without risk. Because when you lend money to individuals, when banks lend money to individuals, usually the risk of default. But for a government, when you lend money to a government, you're sure that the government will always repay. Yeah, if the government is unable to pay from the taxes collected, they'll just increase taxes. So it's very, very safe. So that's what I would say. In that case, probably the government is not influencing. But on the other hand, I can say that the government is also influencing the appetite for commercial banks to uptake the treasury bills, treasury bonds, all these government securities. Because of also the interest rate cap. The government enacted the interest rate cap in 2016. And the impact of this is that the banks are not able to make more money from the interest rate spread. So they have no other option. I think it means if the market was allowed to self-regulate, so that the interest rate is set by the market force of demand and supply in the market, then probably we will not be seeing a lot of investment by commercial banks in the treasury bills and other government securities.
Okay.
Yeah, it's important to curb government involvement in, let's say, in the domestic kind of, because we have, in terms of the debt that the government gets, the government can borrow money externally, the government can borrow money internally. So in that case, this aspect called domestic borrowing.
Okay.
So when government borrows locally, there's what we call crowding out of private investment. The government takes all the money because the government offers a better rate of return to the banks as compared to individual investors.
Okay.
So it means that most monies will be channeled to the government. And the risk of that is that generally, in government, money is, when you get money there, they just spent. They just spent. They're not put into productive activities. So in the long run, the economy of a country may be affected. The economic growth of potential of a country may be affected if the government borrows too much locally. Another thing is that in terms of the welfare of the people, when the government borrows money locally, they usually at a higher rate than international borrowing. So in that case, what the government does is the government taxes the people more to be able to meet this high interest rate that is charged. Yeah, so the only thing is that usually find governments, when they're elected, they usually make promises to the people. And sometimes for them to be able to fulfill these promises, they are forced to borrow money to be able to meet the deficit, the budget deficit. One key thing that the governments do is that they just need to ensure that they collect, they increase probably the tax base, just become efficient in terms of tax collection, so that the taxes that we collect, we're able to collect the taxes that are able to help us meet the budget that has been set.
Thank you so much for that. Well, there you have it. This is a clear explanation of what treasury bills are. Maybe it's something you're interested in investing in. Well, I do hope you did learn a lot from this particular episode. Do join me next time because we have more interesting and educative financial and business terms for you.
Welcome to the home of beaches, luxury and entertainment. County 001, Mombasa County. Mombasa County is Kenya's second largest city after the capital Nairobi, with an estimated population of about 1.5 million people. The county is further divided into 6 sub-counties, namely Mvita, Jamvu, Changamwe, Kisauni, Nyali, and Likoni, each headed by an elected member of parliament, and further divided into 30 wards that are each headed by ward representatives. It is under the administration of Governor Ali Hassan Joho, who is deputized by Dr. William Kingi, Mohammed Faki as senator, Asha Hussain as woman representative, and Evans Achoki as county commissioner. Mombasa is a regional, cultural and economic hub with an extra-large port and an international airport. Located on the east coast of Kenya, it is an important regional tourism center and is also a second capital to most people. Strategically placed along the Indian Ocean, it has been controlled by many countries due to its historical trading center. Being a tourism destination, it contributes largely to Kenya's tourism industry, which contributed a total of 294.6 billion shillings to the country's economy in 2017. According to a Jumia Hospitality report of 2019, the numbers represent approximately about 3.7% of the total GDP, which by the end of 2018 expected to rise by 5.2% to reach 310.1 billion shillings. Mombasa County is your #1 holiday destination.
According to the International Telecommunications Union, ITU, approximately 90% of Kenyans have access to the internet, with the majority being connected via their mobile devices. This presents great opportunities to leverage technology, particularly video technology, to fast-track delivery of services to people and communities that need them the most. Furthermore, this potential can be multiplied with the use of video compression standards that make it possible for individuals to record videos in such a way that they take up less memory space and use less bandwidth. As such, compression standards have the potential to improve service delivery in almost every sector and make a difference in people's lives, ranging from education healthcare, agriculture, security, governance, among others. Ladies and gentlemen, as the government body responsible for the provision of standards and conformity assessment, we pride ourselves at KEBS in providing standard-based solutions that promote innovation, trade, and quality of life. Ladies and gents, in a fast-paced world, we cannot underestimate the role that standards play to any developing nation. We acknowledge that standards are important tools of trade. Standards greatly help in promoting innovation and giving entrepreneurs a competitive advantage. Research has shown that implementations of standards increases national GDP by at least 28%. In line with this, KEBS, through its strategic plan 2017-2022, has aligned its organizational goals with those of the Big Four agenda and other government projects. In this regard, KEBS has published a national standardization plan for the development of those standards which are required by the government, private sector, and interested parties. Further to this, we have developed standards which play an excellent role in facilitation of regional trade among members of the EAC, and to this end, KEBS has participated in the harmonization of 1,500 standards.
What sets you out from the rest? What makes you stand out? Get the most outstanding and credible business information. Only on Metropol TV, Kenya's first business channel.
Good afternoon and welcome to Markets Today. I'm your host, Mbithe Mwema. I hope you enjoyed your long break. Today being Tuesday, the 22nd of October, a few days to the end of the month. What's happening today? What happened last week? What do you need to pay attention to? And more importantly, will your cost of debt be reviewed anytime soon? What does that mean for you as an investor or as a consumer of debt? We will be discussing this and more with regards to the highlights on the Nairobi Securities Exchange last week and what we expect to make headlines this week. Later on in the show with Mr. Robert Yahweh, who's a personal financial literacy coach and works with Quadrant Shift Africa. Now, let's come back to what is happening over the day. We have seen, first and foremost, NCBA introduce additional shares onto the Nairobi Securities Exchange. 793.8 million new shares have been introduced. This follows the merger of NIC Bank and CBA Bank to become the third largest bank. There have been a series of events culminating to what we have seen today, which involved a bell ringing by the NSC CEO as well as other executives from the newly merged institution. Now, 793.8 million shares takes the total number of shares outstanding for NIC, or rather NCBA, to 1.4 billion shares that are now listed on the NSC. What has happened to price? Last week, it was one of the top gainers. It closed up at 31.95 shillings. Today, there's been little movement with regards to volumes trading, but we have seen it tickle up to about 33 shillings per share. There's net demand on the particular counter, but not too much supply. We had actually already estimated that these new shares would actually push up the share price to about 33 shillings, and this was incorporating the element or the impact of the merger and the new bank, as well as the new numbers that we're looking at with regards to price to book value for this particular counter. At about 33 to 35, it's trading at book value, and we have seen an erosion of the discount that the previous bank, NIC, was trading at. We think it will continue to trade at this point, which is about 15% from when 15% up from when they actually announced the merger, and maybe even 40% up from when they started the merger conversation, which was from last year towards the end of December. Now, what else is happening in the counters today? Apart from that, we've seen a bit of a huge trade go through Safaricom, 16 million shares. Today, for once, we see Safaricom topping the charts with regards to volume. We have been seeing a bit of volume going through on Equity Bank. Last week, for the last 2 trading days, Thursday and Friday, it was the top traded stock following the conversation with regards to a rate cap repeal as the president sent back the Finance 2019 bill to Parliament, asking them to remove in totality the element of the rate cap. In other words, we don't expect to have a rate cap, and this has been positive news, especially for the banks, and we have seen a lot of foreign interest with regards to buying, as well as foreign investors who've been holding onto the stock for a while, seeing this as a market opportunity to exit this particular name. Now, today it has been the second largest traded stock on the Nairobi Securities Exchange. It has traded 11 million shillings. We say that this is a continued foreign seller who's been in the market since last week. Demand is more or less split between the foreign and the local demand buyers for that particular counter. KCB, Cooperative Bank, Barclays Bank, all the other banks, not too much activity happening there. Now, the question is, why is there a lot of activity on Equity Bank? For the longest, Equities Bank's strategy with regards to operating in a rate cap environment was to reallocate capital to government securities. For a while now, it has been envisaged that it would be the biggest beneficiary if anything like what we are hearing now, rather seeing now, rate cap repeal would happen. In other words, Equity Bank stands to gain the most with regards to interest income, because what it will essentially do is reallocate capital from its government securities portfolio, being one of the largest banks with a very high liquidity ratio, closer to 60%, and we expect to see increased income for this particular counter. The dividend yield is not as robust as some of the other banks, such as Barclays and KCB and Cooperative Bank, which are all at 8%. But the element of capital appreciation and the fact that it's actually trailing behind KCB, which is at about 43, Equity now is tinkering about the 40 shilling level. We have seen a bit of an interest, and traditionally, or rather historically, we have seen Equity and KCB trade go head to head with regards to the price. So investors are possibly awaiting to see if they can get to the 43 shilling mark and close in some capital gains on this particular stock. That said, what are we looking out for this particular week? A couple of things you need to focus on. After the listing of the new shares for NCBA, that's largely the huge corporate action that we are waiting to see. For the next 2 weeks, the key decision that we are all looking out to see is what happens when the MPs come back from recess. This is the 29th, which is next week, 29th of October. What are they going to do? So far, they're already saying that they think, or they get the sense that the president is conflicted because he is an owner, and rather his family is a majority owner, if not the dominant owner of NCBA, which is the third largest bank. The MPs are saying that, no, wait a minute, there's something wrong here. The president is conflicted. Why does he want the rate cap to be removed, yet himself, through his family or directly in one way or the other, has an interest in one of the largest banks in Kenya? Is this fair? But then conversely, some of the people are also asking for this particular MPs. Do they not also have lending facilities with the banks? So who's conflicted? What is right? What is wrong? Maybe that is something that is over and above our purview. But what we know, or rather what we are considering, are two things. Who will be the biggest beneficiary? Can the banks go up from here on? From last week, we kept telling you 15% upside was already here with us. At least we expected to see this at the end of this month, and that's already underway. Now, the question is, will anything shift fundamentally with regards to how the banks operate? Also noting the fact that they already have a banking charter that in a way bounds them with regards to how much more they can do in pricing of this current debt, and how can they be able to actually extend the gains? In other words, are we going to go back to the days of 2016? Are we going to see the margins that we used to see then, which were north of 8% and now are currently at 6%? Are we going to see a better performance with regards to the dividend payouts to you as an investor? So that's the key thing that we are considering and trying to figure out who's the biggest beneficiary from a fundamental perspective, and who should you actually go long on if you're looking at the Kenyan banks. Then the second thing for you, if you are a Kenyan consumer, this debt. What does it mean for you? Are you going to start paying out more? Certainly, but to what extent? Are you cushioned to actually manage the risk that this debt will bring upon your own personal portfolio or your own particular business? And are there other investment opportunities that can help you hedge against this particular risk? For this, we will be discussing the performance on the NSE and also try to get our heads around what should your considerations be if you're an investor or if you're a debt consumer. As always, we are running live on our YouTube page, our Facebook page, also on our Twitter page. Speak to somebody near you, engage with us. What else do you want to hear? What do you like about what we are telling you? What do you dislike? What are your thoughts on this rate cap conversation? Is it a done deal? Is there still more to be done? We take a quick break to look out for the prices for daily commodities. When we come back, we are joined by Mr. Robert Yahweh. He is a personal financial coach and also part of the Shift Quadrant Africa team. We will be discussing the performance of the NSE last week, and as always, we'll be challenging to see what investment tidbits that he gives us over the show. Don't go anywhere and see you shut.
does it take to run the Standard Chartered Nairobi Marathon? It takes courage. Courage to start the grueling journey. It takes self-belief and a tenacity to keep going even when it hurts. It takes a spirit of adventure to rise above and conquer. On 27th October 2019, put on your running shoes and take on the challenge. All proceeds from the marathon will go towards Future Makers by Standard Chartered, our initiative to empower the next generation to learn, earn, and grow. Register now on www.nairobimarathon.com.
It's today been the 22nd of October 2019, the first day of trading. We'll be giving you an update with regards to what's happening on the Nairobi Securities Exchange, what happened last week, who are the top gainers, where was volume actually accumulating, or rather, where was investor interest skewed to? And in other news, what do you need to look out for this week? We are joined by Mr. Robert Yahweh, who's a personalized financial literacy coach in the studio. Welcome to the show, Mr. Robert Yahweh.
Thank you very much.
All right, let's look at last week. It must have been a very interesting week. What was the thing that stood out for you in the market's performance?
The interesting thing is I looked at the week's gainers.
Yes.
And Home Africa actually was the highest gainer.
Oh, wow.
17.39%.
17.39%. That's a huge jump.
Yeah. So for any of the traders out there,
Yes.
speculative traders,
Okay.
if somebody went in on Monday, chances are they left with 17%
Wow.
gain over that week.
That's very interesting. But before we go to that, maybe we can just circle back into the indices and see how they performed. And our graphics team can put out graphic number 1, and it has the FTSE, the Financial Times Stock Exchange NSE 15 Index, as well as the NSE 20 Index and the NASI, that's the Nairobi Securities Exchange All Share Index. And that is graphic number 1 from our team. Robert, last week there was the conversation with regards to the rate cap, and the president taking back the finance bill to Parliament, asking them, rather instructing them to remove that particular line.
Yes.
Did this have an impact on the indices? Because we can see a slight movement upwards from the 16th of last week.
Yes, there was a major effect on it. But the interesting thing is what I don't get is with the rate caps, the banks have been making much higher profits than they did when we didn't have a rate cap.
Yes.
So what
How
does
so?
mean? That's what no one is asking.
Yes.
Is with rate caps you have better performance than without it.
So now you should expect worse performance.
I should expect worse performance if you follow the existing trend.
Yes.
But more of it might be because most of them might exit, like you mentioned earlier, government paper.
Government paper and then reallocate to the private sector.
To the private sector.
All right.
But the question becomes, will it come to give us more debt, more loans in the SME sector, which is what is said to have suffered the most from the rate cap?
Yes.
Or will it be the same? They'll just find another larger entity to go and put their money into.
Okay, that's a very fair question. And I think, we can see a slight movement with regards to the indices from the 16th, because this is a conversation that came out mid last week. And we did see some uptick with regards to the prices in banks, 5%, most of them, at least on that particular day when the rate cap conversation came out, that being Thursday. But interestingly, out of this graph, which is graph number 1, the best performing index is the FTSE NSE Kenya 15 index. Why is there a lag between this particular index and the other two indices, the NSE 20 and the Nairobi Securities Exchange All-Share Index?
I think it's those 5 additional counters.
5 additional counters.
Which must be the ones that have a major impact on the index.
Okay.
And as we know, once you have Safaricom in the top one.
Yes.
And you have the banks.
So KCB and Equity Bank and Cooperative Bank. All right.
So once you have those, and then breweries.
Yes.
As usual, on the 15.
So okay.
When you add the additional 5 to make the NSE 20,
yes,
then those 5 are the ones that are really having an impact.
All right.
On that differentiation.
Okay.
Because otherwise, if you look at the performance, they almost are in par.
They're almost in par.
Yes.
But then there's a dilution element of the other constituents on the other indices.
Yes.
All right. Now let's go to your favorite stock of the day, housing finance. And that is graph number 2 with regards to the best performing shares for the week. So we have housing finance there is up 17.39%. NCBA, that's the recent.
Actually Home Africa.
Yes, Home Africa. Sorry, Home Africa, not housing finance. I apologize for that. That's graph number 2 there. NCBA up 10%, UNGAD up 9.35%, Express up 9.23%, and EGAD up 7.49%. Were there volumes that were going through Home Africa, 17.39%? What was happening there?
There's quite a substantial volume. There's been a lot of activity on Home Africa. And I think some time back, there was somebody who seemed to be a raider who was going in. Edelman.
Yes.
And maybe somebody else has realized the land banking.
The land banking.
Finally is ready to get cashed out.
Okay.
And for those of us who thought Home Africa was an instant trade, will now realize that they basically were land banking.
All right.
And as we are getting larger and larger investments coming out, and with the housing agenda by the government.
Yes.
We've already seen a number of the developments coming up.
Yes.
And I think what Home Africa is sitting on in Kiambu.
In Kiambu.
Is ideal to put up a small little city.
Okay.
Yes.
So do you think it can actually rally? Because it's also coming off a low base. The price there is 0.54 shillings.
Yes.
About 50 cents.
It's the best time to go in.
It's the best time to go in.
Yes.
Why would you get 50 cents to buy the share? I haven't seen a 50-cent coin in a very long time.
That's why you can only buy 100 at a time.
That's why you can only buy 100.
Yes.
So do you think, what's a fair value? Is it a shilling? Is it 2 shillings to reflect the assets that this company is sitting on?
Actually, it's undervalued.
It's undervalued.
It's undervalued.
Okay, fair enough. So 17.39% up in 1 week. We could see something more. We need to pay attention to that particular counter. All right, NCBA. We've also seen the new shares come to the market today. 738.4 million, rather 0.8 million new shares have been listed, and they were listed this morning. This is news that was expected. What would you explain, or rather, what is the rationale for the 10% movement in this stock over the last 1 week?
Because again, I think it was undervalued at what we were thinking. And you're saying we've now moved, and they're now the 3rd largest bank.
Yes, they are.
Now, as the 3rd largest bank, which means that with the repeal of the
rate cap.
Wow. Then you can imagine what's going to happen.
Okay, that's interesting, because we talked about it the first time that they actually came to the market and launched the new name NCBA. And the sense that we got was the fair price, or rather the fair value to reflect the new shares would have been anything between 33 to 35, depending on the number of shares that they would have introduced. Today it's at 33, so it looks like it's fairly priced. Do you think it could go higher than 33, 34?
Higher it will go.
Yes, higher it will go.
It will go.
Now the dynamics have changed. So it's also another particular stock to watch out for. Now tell us, Unga Limited, what was happening there? It was up 9.35%.
Again, Unga is a share that should always do well. Because there's one thing we'll never stop doing.
We shall not stop eating wheat.
We will not stop
We cannot be a gluten-free economy.
Yes. Basically wheat, your maize, and that. But also you remember there's a time at which there was about to be a strategic investor coming in.
Yes.
and it's possible somebody's positioning.
Yes.
Hoping that that strategic investor will finally come in and delist it.
All right.
Which will be a negative thing because I think we are doing too much. We are delisting too many companies.
We're delisting too many companies
without listing new ones.
Without listing new ones. Yes. Robert, let's just take a quick break. Look out for the closing bell. Don't go anywhere. We'll be back shortly. And we are back looking at the top performers for last week. With regards to price, Homes Africa was the best performer, up 17.39% over that particular week, followed by NCBA. This is the NIC-CBA merged entity, which traded up 10.17%. Unga was up 9.35%, Express 9.23%, and eGoods 7.49%. We'd covered three of these stocks and what was happening, or what was driving the price performance. Let's look at Express and eGood. Robert, what was happening there?
Those two are counters which I've never understood.
It's probably speculative.
It's most likely speculative.
Yes.
And would be a good thing if it's people who are out there trying to test how to invest in
how to invest. Maybe they're the ones who are.
Yes, and I'd say it's same way like we're saying is that even with Home Africa.
Yes.
If you've got 1,000 loose shillings right now.
Just put it there.
Just put it there.
Okay, interesting. Now maybe we can just switch over to the amounts that were traded last week, because we did see the element of the rate cap conversation. This is a discussion that came out overnight on Wednesday night. On Thursday, the communication was made public and the sent back the Finance Bill 2019 to Parliament, saying get rid of the rate cap conversation. Parliament was due to go for recess, but on that particular day, we did see stocks trade up 5%. Equity Bank up 5% on that one day. KCB up 5%. Cooperative 5%. Barclays 5%. What's your read on this particular?
Again, like I said,
yes.
The good thing we keep forgetting is that when there's a trade,
yes,
there's a seller, there's a buyer.
There's a seller, there's a buyer.
So the question is, why are we so concerned about who is buying? Should
yes.
we be concerned about who is selling?
Who is selling? Yes, we should also be concerned about who's selling. That's a valid point.
So there's an equal number of sellers as there were buyers.
Actually, the sellers are The sense that we've gotten is that it's been one or two huge sellers, and it's people who've been waiting for this rate cap conversation to happen for a very long time. And then the demand is sort of mixed between the foreign demand and local demand. And I can understand the element of the local demand, because local demand had been allocating funds to government securities as well, similar to what the banks were doing. But then this does change the dynamic for revenue appreciation and capital appreciation for the stocks.
Are we sure they were actually just speculators who are exiting?
Not speculators, people who'd been holding the stocks for a while and had been waiting for the rate cap.
So why? If there are many coming in,
you've made your money.
And the suggestion,
Yes.
what you were suggesting was that if the rate cap goes, then performance of the banks would go up. But somebody doesn't think it will.
Yeah, somebody doesn't think it will. Either that, or maybe they came in at 26 and are exiting at 40.
And like we always say, the question becomes is that we can't really say much unless we know at what price they came in.
Okay.
And also could just be somebody rebalancing his portfolio.
What would you do with that information? Last week, rate cap conversation comes out, banks are up 5%, some of them already up 10%. What would you do with that information?
If I'm in or out?
If you're out.
If I'm out, I stay out.
You stay out. If you're in?
I exit.
You exit.
Yes.
Take advantage of the
I take
profit
advantage
taking,
of that, yes.
and then you come back again.
Then I come back again.
And that makes absolute sense, because we suddenly expect like sort of a knee-jerk reaction. That's what you're saying. A bit of excitement, and everybody figures out, okay, maybe this is not as lucrative as we thought. Yes. Okay, fair enough. We were discussing this a bit earlier just before we came to the show. The question on the fundamentals of the banks. Do we think the banks will actually be prudent and conservative with regards to reviewing the cost of credit in Kenya?
They can't. You see, the whole reason why the banks go and give the money to the government is because the government is safer.
Yes.
Now, there's no way I could give money to a trader who is a higher risk and give him at the same rate as I would give government.
That's true.
So if I'm willing to give government at 10, 12%, definitely I'm going to give it to somebody else at 18 or 20 or 21%.
Yes.
But I don't think it's a bad thing. I believe at 14% what happened was it's not what this country, we comfortably can survive at 20, 21% interest rate.
Yes.
Yes. So long as you're doing business with the money. The problem is that some of us are using it for consumption.
All right.
If you're using it for consumption, then
forget it.
Then forget it.
Yes.
But as a trader, as somebody who is actually investing in something, I think getting 22% return on turnover is very easy.
Is it? What businesses are this? I'd like to get into them.
I have a pet example.
Okay.
And it's the potato.
All right.
Follow the potato from Jambini.
Yes.
To the time it gets sold to a chip shop.
Yes.
It's actually appreciated by almost 100, 200%.
Wow. Fascinating.
In a day.
Fascinating.
And that's why your mobile money platforms are making money. Because somebody can borrow in the morning, is comfortable paying 10% because he's making 100%.
Yes.
For the day.
Yes.
And most of the mobile money companies will tell you a very large percentage of their borrowers pay by end of day.
Okay.
They do not hold on to the money for a week. They don't hold on to it for a month.
Turn it over.
And that's what they do.
And then
it's
you
how
pay
they
back.
did it with Shylocks.
Yes.
That's how you did it. You arrived at the Shylock in the morning. You left him your phone. He gave you money. You went and traded. You came back in the evening.
Yes.
You paid him. You picked your phone.
Tomorrow.
And you come and do the same tomorrow.
That's true.
And that allows you the flexibility that if the market you are in today is not lucrative tomorrow, then you have no credits.
You have no
credits that's an overhead on you.
Okay, fair enough. So do you get the sense that the demand for credit, because I like the element of the example of the Shylock, or rather the mobile lending and its predatory pricing, because it's very expensive. But then the amounts that were extended as debt were very little. Now, when you come to the banks and the banks have larger balance sheets, do you get the sense that the business community has the requisite demand to be able to take on this additional money that should be expected to come into the market?
Not in the way the banks behave today.
Yes.
The banks are hands-off. And I think that has to stop.
That has to stop.
The banks will have to start getting more involved in their borrowers' lives, in their savers' lives.
How? Do you even want your bank involved in your personal life?
I think I do. and it's interesting because more recent, some time back, I actually was sitting back and I actually penned an article in LinkedIn.
All right.
On whether KRA basically are failing by not sitting on the boards of companies. Yet KRA is actually a 30% shareholder in your business.
Yes, it is.
Any business.
That's a good point.
So at 30% shareholding, shouldn't they have a seat on the board?
No. Oh yes, it
Yeah,
depends.
with 30%, they should have a seat on the board.
Okay.
Okay. So the same thing I ask is that if the bank is funding me to the level where 80% of the money in my business is the bank's money,
then
shouldn't the bank get more involved with what I'm doing with the money?
That's true.
Or if not just what I'm doing with the money is, can they leverage so that I can get certain services at a reasonable cost?
Yes.
Because if you're funding 50 people who are in the transport industry, why stand aside?
We need more value add from financial services.
Why not sit in? If your bank has 50 customers and they walk to one of the vehicle companies and says, you know, we're bringing you this number of customers, please give them a discounted rate.
Exactly.
And that's what is lacking. Our banks are still too traditional. They still think their business is to borrow low and lend high.
It's such a fantastic business. I wish I could be able to just take money from you at 2% or 3%, which is what the big banks do, give it to you at 13%, and, you know, figure out my costs in between. That would be such a lucrative business.
And then you still complain about a 14% rate cap.
Oh, well, let's see how that goes. But then now I want to come back to what we expect for the week going ahead. So today, just before we came to the show, we've seen 16 million shares traded in Safaricom, Equity Bank 14 million shares, KCB about 4.4 million shares. We're still seeing a bit of interest and dominance in the banking stocks. Yes. And I think the key date we're waiting to hear is the 29th of this particular month, because that is when MPs come from recess. They have till the 1st of November to evaluate whether the decision from the executive office makes sense or not. Do you have any thoughts with regards to if anything else will dominate trading this particular week?
Always as we come towards the end of the year, there'll be a run on the banks.
A run on the banks for year
Don't
end.
forget all our banks have the same year end.
Yes, 31st of December.
So whoever taking positions now is because whichever way it goes, the dividend you're looking at or the return you're looking at is based on the performance until 31st of December. Whichever way the rate cap goes, that will not have much of an impact. So you go in today and hope that the banks have actually made increase in profits as they've done before.
Yes.
And it's easy to tell because all you have to look at the last 3 quarters, they have done extremely well.
Yes, they have.
So there shouldn't be much of a problem with the fourth quarter.
Okay.
So most people who are going in are most likely going in for the fact that the banks are coming towards year end.
Okay.
The interesting ones would have been Safaricom, as usual. Okay, the problem with Safaricom is that they have so many shares in the market that they will always be the mover.
Yes.
Yes, they'll always be. It's a share that everyone is interested in.
And it's 50% of the market. It's 50% of the market.
Yes.
Okay.
And I think we need to start excluding it.
No,
see, basically when we say there,
if you exclude, okay, fine. If we start to exclude it, what are we going to include? Because from even the price movers, you can give me commentary on some of that. So.
Because there'll always be a mover. So for me, that's interesting that there's been a lot of movement with Safaricom. But like you said, possibly it's people who've realized.
Yes.
They might have gone in at 12 shillings, at 15 shillings. It's time to get out.
It's time to get out.
And they know that with the rate caps, they might as well take the money and put it in the banks.
Yes.
Yes.
All right, interesting. So then, now when we're looking at the rate cap, we have looked at the impact on stocks and certainly expect a run on banks in the final quarter. That tends to happen traditionally, but now we do have an added trigger on that actually changes the fundamental way that the banks work. Are there any other particular sectors that you see some excitement as we head to the end of the year?
The interesting one is breweries seem to have done quite well.
Oh, breweries do okay.
Yes. So I'm wondering why. Or is it because we're coming to the festive season?
Oh, could be. Maybe everybody's like, before, buy one stock, buy one beer, drink one beer, buy one share.
I think what the rate cap would say a lot.
Yes.
Because don't forget, it'll also have an impact on our industrial and commercial sector.
And it does release money into the economy. So people could potentially be drinking more.
Yes, but let's look at it this way. If the interest rates go up,
yes,
then what happens to our larger trading enterprises?
That's a good question. What are your considerations?
The cost of credit goes up for them.
The cost of credit goes up.
So that will affect their profitability.
That element of operational expenditure.
So the question becomes, do we want to move money towards the SME while denying it from the larger industries?
From the larger industries, okay.
Yes.
So there's excitement, yes, but then there's a need to actually be a bit more fundamental and a bit more conservative in your observations and just see what do all these decisions mean for you as an investor. All right, I like that you've brought out the element of looking at the cost of debt for corporates. Now, you are a personal financial literacy coach.
Yes.
What does this cost of debt mean for people who are invested and have used debt to make investments?
if they've done their math right, they should be okay.
Okay.
And let's hope that even after the rate cap is raised, the banks don't dash to adjust their other loans.
Okay.
I hope the people who already got loans should be able to survive for a while before they have to deal with it.
Yes.
Because you see, for example, if you're in real estate, you can't wake up tomorrow and increase rents.
That's true. You need some time.
Yes. If you're in manufacturing, the same thing. So what we need to look at is, does the raising of the rate cap also mean that the banks will then pay us more for fixed deposits?
Okay.
If they will, then that's good.
All right.
Then basically, those people who are getting the handshakes we're talking about,
then they can go and put.
At least you can go and put your money into a fixed deposit and get a better return than 6%.
That's very true. Yes. All right. We are coming to the close of our show. Is there anything that we have missed out that you feel is pertinent to this conversation that we are having?
The interesting one is, like I said, Home Africa, and
we can put up graph number 3. That's Home
Yes.
Africa. All right, as they put it up.
The share is, there's no major announcement. So that's the interesting thing. There's no major announcement anywhere. But you can see the volumes that have been trading on Home Africa are quite high.
Oh, from September, actually.
Yes.
From 9th of September, we have over about 500, close to 600,000 shares traded. Yeah. All right, so that's what, there's a bit of activity happening there and going up.
So there's quite a bit of that, and you can see then it's actually triggered something more recently in the last week.
In the last week, okay.
Yes, and there's a run for it.
There's a run for it, and that's at 0.54, and it did touch a high of 0.65, 65 cents over the year.
And what I say is that a lot of times we look at it in terms of the absolute figure.
All right.
And not the percentage.
Not the percentage, okay.
If you're looking at a 17% increase,
yes,
that means if you put in 100,000, then you're left with 17,000 shillings.
Yes.
At the end of that week.
Okay.
So if somebody is actively trading, then some of this.
Pay attention to volumes. Penny stocks.
The penny stocks.
So our favorite penny stock for now is Home Africa.
It's Home Africa.
Home Africa. All right. And then NCBA, that's the final chart that we're looking at there.
Yes. I think that one you can see the way the market reacts to one was the announcement.
Yes.
Which was in August. You can see there was a slight peak from that. Then as usual towards closing.
Yes.
There will always be a shoot.
There'll always be a shoot. Okay.
Yes.
So
as people just they've made their money and they're getting out.
And they're getting out.
Which tells you that we have a lot of people who basically are looking at, who trade specifically just for capital gains.
Just for capital gains. And that should be an interesting story. But you have to be active in terms of looking at the data from the market.
You have to be active. And again, like we say, if you're on the My Stocks platform, then we do the watching for you.
You do your watching and thinking for us.
And then we send you the alerts.
Okay.
All you need to do is to call your broker and tell him to buy or sell.
And that is My Stocks Kenya. My Stocks in Kenya or My Stocks Kenya?
MyStocks.co.ke.
MyStocks.co.ke. If you're unable to think for yourself, not that we are undermining your thought capability, but MyStocks.co.ke can be able to give you alerts based on what your investment strategy is. Now, today we have talked about penny stocks. Home Africa has been the best performer last week. And in Robert Yahweh's words, if you put in 100,000 last week, you made a good 17,000, which you could have easily spent over the weekend without touching your normal source of income. Now, there's a lot of things that are happening here. There are fundamental drivers and there are also just technical drivers to look out for on the Nairobi Securities Exchange. It's imperative that you actually keep abreast of the information. MyStocks.co.ke does certainly offer that kind of information for you, as well as insights and alerts. What are we expecting this week? A continued resurgence of activity on the banking stocks, and we're also seeing that picking up on Safaricom. This will be the key highlights for us this particular week as we await the 29th of this month when the MPs come back and decide. And for your benefit, if you're just joining us, the NSE has already closed. We have seen 16 million shares traded in Safaricom, 14 million shares traded in equity, 4.4 million shares traded in KCB. The key thing that we are seeing today is a lot of foreign sellers on this particular banking stocks. Demand is split between the foreign and the local investors. And for the final parting shot, 738.9 million shares have been introduced into the market for the NCBA merger, and it is trading at about 33 shillings. So something else to also look out for. Thank you for joining us once again as we continue to evaluate the conversation of debt, its impact on you as an investor and as a debt holder if you are a consumer of debt. Join us again tomorrow at 2:30 as we evaluate the NSE and give you stocks. If you haven't already, look out for Homes Africa and see if there's any other penny stock that you want to buy. Let us know. Tweet us on our handle, and that's Metropol TV. Thank you once again and good afternoon.
Or marketed volumes and compare that to increase in market price. And when you look at cereals such as wheat and maize, the output increased by 20% in 2018 compared to 2013. However, the market prices were 19% lower in 2018 compared to 2013. Horticulture, we saw an increase in 44% in output in 2018 over the 5 years, 2018 compared to 2013, and prices rose by 24% in that period. Sugarcane, we saw output decline by 20% between 2013 and 2018, and prices rise by 14%. When it comes to coffee and tea, we saw an aggregate increase in output of 12% in the 5 years, compared to a 20% increase in prices. And livestock and related products had a 32% increase in produce, in marketed produce, and a 20% increase in price. So the growth was really uneven, but we saw that the crops and the agricultural products that did very well were those that were able to record an increase in both marketed volumes and market price. So what does this mean? This means that we've seen tea and horticulture now accounting for over 80% of commercial agriculture revenues. We've seen a reduction in the diversification of commercial agricultural products, and we've seen an increased concentration whereby tea and horticulture comprise of 75% of all commercial agriculture revenues in Kenya in 2018 compared to 67% in 2013. So diversification is reducing and concentration risk is increasing, is a trend that we are seeing here. We also had a look at the average prices paid to producers, and what we noted is that across all categories, the increase in average price paid to producers exceeded the increase in commercial revenues. So for example, if you look at beef, we saw an increase in revenues of 46% in 2018 relative to 2013, but average price paid to farmers, we saw an increase of 47%. Similarly, for tea, we saw an increase of 42% in marketed value and average price paid to producers of 40%, so almost equal. And in the case of coffee, we saw a 47% increase in marketed volumes in 2018 relative to 2013, but a 67% increase in average paid to producers during that period. However, for coffee, we also note that the increase in average paid to producers happened really in 2014, and since then it's been more or less stagnant between 2014 and 2018. Even where we saw a decrease in marketed volumes, such as in the case of wheat, the marketed volumes were down 24% in 2018 relative to 2013, but the average pay to producers was only down by 15%, meaning that average pay to producers exceeded the decline in revenue, or did better than the decline in revenue.
In journalism training, only 5 viewpoints matter for a proper story. My experience as a business journalist has, however, taught me that there is more. So now I understand that before I walk into that interview, I have to look for the hidden. So for me, what sticks is the story behind the story. What would you say is that unique very unique selling aspect that you can guarantee I will not find anywhere else.
Good question.
My name is Ingrid Nantege, and this is Metropol Television.
From getting traffic updates to buying a new pair of shoes, ordering lunch, or monitoring our health, smartphones have become part of our lives. We often need our hands to operate these devices, but is it possible to operate our smartphones by simply just blinking? Samsung says yes. Let's take it away. Contact lenses capable of recording video and taking pictures could one day become a reality after Samsung was granted a patent in the US to develop the technology. The lenses feature motion sensors, which means that wearers could control devices with their eye movements and potentially give commands to the devices remotely when blinking or using their peripheral vision. The contact lenses could also bring photos and videos directly into wearers' eyes. Samsung isn't the first company to file this sort of patent. Google is also working on a similar project and owns 2 copyrights for smart contact lenses. This means that the lenses will actively be recording everything we do, which may pose security concerns if the data fell into the wrong hands. It is not clear whether Samsung plans to mass produce this technology following the green light. So, would you want to control your smartphone hands-free using these smart lenses? Let us know through our social media handles at Metropol TV KE.
You ask me what business is, I'll tell you its numbers. Profits are numbers. Losses are numbers. Sales are numbers. Everything in business is numbers. So once you begin to understand the importance of data before you make that business move, you'll fully begin to appreciate Metropol TV's database programs. My name is Simba Elijah Charles Kiage, and this is Metropol Television.
Native to the tropical regions of southern Brazil, the passion fruit in its purple and yellow variant has nutrition and health benefits, hence its popularity. It was first farmed in Kenya in the 1920s for commercial juice purposes. The passion fruit contains flavorful juice that is semi-acidic to acidic. It has 2 variants which are differentiated by the color of the ripe fruit, known by their scientific names Passiflora edulis, which is purple in color, and Passiflora flavicarpa, which is yellow in color. The fruit has a tough outer skin with a juicy seed filled inside. It grows well with rainfall of between 900 to 2,000 millimeters per annum at an altitude of between 1,200 to 2,000 meters above sea level. The optimum temperature is between 18 to 30 degrees centigrade with a soil pH value of between 5.5 to 6.5. It can grow from either seed or grafting. The seedlings are planted on rows that are 2 meters apart and 3 meters from one plant to the other. Passion fruit grows as vines and hence requires support. For this, trellises comprising of stout wooden poles and galvanized steel wires strung along the rows are used. Poles should be 1.5 meters tall with 45 to 75 centimeters in the ground. The wires are strung at intervals of 30 to 40 centimeters starting at the top of the pole. The trellis rows should be oriented north to south to ensure maximum sunshine exposure. The vines should be allowed to grow together along the trellis to promote cross-pollination. Passion fruit vines start yielding fruit in 2 to 3 years. The fruit takes 2 to 3 months to ripen. You will enjoy the harvest from the vine for up to 3 years, after which it is advised to replace it with new plants. Passion fruit grows well in Kisii, Nyeri, Kiambu, Nakuru, Kakamega, Murang'a, Embu, Vihiga, Nyamira, Trans Nzoia, Bungoma, Siaya, Nandi, and Uasin Gishu counties in Kenya.
From street to street. Tunaangazia biashara kadha wa kadha ambazo kuwa na as little as 5,000 shillings unaweza anzisha biashara yako na igrow. And from these businesses, you can get an idea or two on how to boost your business. Haya basi, ishakuwa kipindi ni The Hustle na mi ni Tabitha Muthoni ndani ya Metropol TV. Hi guys.
What does it take to run a business that succeeds?
What does an entrepreneur need to do for his business to scale up and outgrow his dreams?
What does a CEO need to know to make a decision?
What exactly makes the stocks move up and down?
Strategy, insights, innovation, growth, leadership, analysis. In an economy that's fast-moving, we are ahead of the game. Armed with data and analysis, we delve deep into the numbers that count, with analysis on key sector and company performance. Join me, Terry Anchebet, on the first of its kind in East Africa, a show that unpacks industries, speaks to business leaders, decision makers, the movers and shakers who steer our economy. The Capital Point, at this time only on Metropol TV.
By banks in Kenya is quite significant to the Kenyan exchequer. So, for example, 25% of all corporate tax paid in Kenya is paid by banks. We're only talking about 38 taxpayers in this case, contributing 25% of corporate tax. We've also seen the effective tax rate. For example, the effective corporate tax rate is quite high at around 35%. And away from corporate tax, we've also seen the impact of other taxes like PAYE and withholding tax and VAT, which are also, again, very significant taxes that are borne by banks and are also collected by banks, having an impact and a contribution to the Kenyan exchequer. So the centrality and the importance of the banking sector to the Kenyan exchequer and the contribution to the Kenyan tax base is very important. And I think that's what this report, I think we've known it somehow, but what this report does is put that in sort of words and figures in clear, hard data. There are a lot of tax disputes that are happening. You tend to have a lot of tax disputes. There's a lot of tax uncertainty out of the new laws that have been introduced. And we're trying to sort of reorient and pivot this towards a more collaborative process between the taxpayers and the tax policy framers, so that we can engage based on actual data and actual research that has been done. So this report, we are hoping, it sets sort of a precedence in terms of a report that forms a foundation on which policymakers and taxpayers can engage with real data as to what should be the actual tax laws that are being introduced. Are they harmful? Are they positive? And what's the impact of them? And what's the effect of that? Rather than just simply saying, I think you're making a lot of money and I think you can pay the tax. Here is a new tax, and you know. So you're trying to engage in a more, if I could call it, in a more scientific way. In terms of introduction of new tax. Some of the proposals is also to look at some of the withholding tax rates on services. That tends to be quite a disincentive to invest in technology, especially cutting technology from outside of Kenya. The other big tax proposal is re-looking and coming up with a really more up-to-date provisions around how bad debts are treated within the banking sector for tax purposes. So those are some of the ideas that are coming out. The levels of transparency in the banks is probably one of the most regulated sectors in the country. And because of that high regulation, complete transparency, the financial statements are available publicly, whether you're a private company or not. Because of that high level of transparency and that high level of regulation, inevitably then the tax compliance tends to be extremely high. Banks can't afford to get it wrong in terms of tax compliance. And so they also invest a lot, even internally, in terms of their technology, their processes, and even just their resources in terms of people to ensure that they're doing it right in terms of taxes. And so you have sort of probably a case study of sort of best practice in terms of tax compliance. And it's good for the exchequer in terms of, and it's good for the country in terms of having, that kind of high level of tax compliance. But the flip side is that because you're so compliant, you're also the first port of call for any new taxes. If there is any sort of deficit in the budget, you sort of also are the easy target because of your high compliance standards. So there is also a bit of a drawback being so transparent and highly regulated and highly compliant. There's a little bit of a drawback there because you're also the first port of call and the first target when looking for increased tax revenues by the government.
Why is it important to start your business fit? Because business is demanding. Your body needs to be ready. Successful business persons always seek to help us before the money. So join me, Douglas Karanja, on Shape Up every day at 6 a.m. on Metropol TV.
Apple fans have a reason to get excited again after the company recently launched a new iPhone exclusive way to make payments and get users hooked into the Apple ecosystem. Let's take it away. Backed by Goldman Sachs Bank and MasterCard, Apple Card is a digital card you apply for and use with your iPhone and Apple Pay. It's also a physical titanium card that works like any regular credit card in places that don't accept Apple Pay. As Apple described, the Apple Card interface in the iPhone's Wallet app is designed to allow users to easily track their spending and pay their bills. The company stressed that in-app color coding will allow users to see the different categories of items and activities that their money is going toward. The app will also estimate how much you'll be paying in interest if you decide not to pay your full balance each month. Apple promises that every time you use the Apple Card, you'll get a 3% back on everything you buy from Apple, 2% back every time you buy something using Apple Pay, and 1% back on purchases via Apple Cash and merchants that don't take Apple Pay. Apple Card was launched in the US with a worldwide release expected soon. Your your Apple Card application could be rejected if you're currently lagging on debt payments or if you're listed as the defaulter. To check your listing status, dial *433# or download the new Cristobal app from the Google Play Store, brought to you by Metropol CRB. From there, you will be able to check your Metro score, listing status, credit report, get your certificate of clearance, and view who has listed you in case you're listed. So, is the Apple Card a sufficient reason to switch from Android to iOS? Let us know through our social media handles at Metropol TV KE.
When you hear the word business, what comes to mind? Skyscrapers, fast-moving economy, technology and innovation, dollar versus the shilling exchange rate, financial markets, or better still, the US versus China trade war? Is there a magic bullet that can spark Kenya into economic growth? How about this? How is Africa the next economic frontier? What does that even mean? Questions that keep popping up. Is foreign aid helping Africa develop, or rather is it stagnating it? Does good politics translate into economic development? Well, on Metropol Debrief, we break down business, telling you why it matters and showing you how and when it affects your bottom line. This and much more on the new season of Metropol Debrief at 8 p.m, where we're bold and balanced.
While there's no definite agreement on the origin of onions, some argue for Central Asia, while others for Pakistan and Iran. In Africa, onions have been recorded to be cultivated first in Egypt and can be traced as far back as 3500 BC. Known by its botanical name Allium caper, onion is one of the crops that has gained popularity because they are less perishable. The common onion has one or more leafless flower stalks that reach a height of 15 centimeters long. Onions are propagated using seeds sown directly into the field, but they can also be propagated using bulbs or transplants. Onions are hardy and can grow in a wide range of climatic conditions. However, the ideal conditions include well-drained, fertile, sandy loam, non-compacted soils, with a pH value of 5.8 to 6.8. They require a temperature range of 13 to 35 degrees Celsius. They can be grown throughout the year with the aid of irrigation. Because onions don't like lots of water, it's advised that you grow them on raised beds to improve drainage. Some of the varieties that you can find in Kenya include White Creole, Red Tropicana, Red Creole, Yellow Granex, Red Bombay. Avoid overhead irrigation as this encourages pests and diseases. In 90 to 150 days, onions are ready for harvesting. After harvesting, dry the bulbs in the sun before storing. In Kenya, onions can be grown in Kitui, Kajiado, Narok, Makueni, Kakamega, Nyeri, and Nakuru counties.
standards, and the fourth industrial revolution. Those who are present with us last year may remember that I talked about the fourth industrial revolution and the rapid change that is happening in the world today. It is worth noting that these changes promise a future of prosperity. Many of them also pose major challenges requiring proactive adaptation by companies, governments, societies, and individuals alike. This year, I would like to shortly highlight three main drivers of these rapid changes that we are talking about and what they mean to you and the organizations that you represent here. The first one is the economic driver. Of the recent past, the world has experienced rising geopolitical volatility. Threats to the multilateral trade systems have increased, making the global business environment more unpredictable, thereby affecting global trade now more than ever before. The economic driver is going to shape how organizations, countries, trade and relate to each other into the foreseeable future. And to this end, common agreed rules and procedures in the form of international standards will provide the much-needed, predictable environment which trade will thrive on. And in the theme of this year, when we are talking about the video, of course, one of the topical issues as far as the economic wars and economic drivers are concerned is the whole issue of the 5G spectrum, which is going to come as a major political economic war, which we have seen already, and which is going to affect the way we will be doing business in the future. The second driver is society and environment. This is going to be another force to reckon because the needs and the expectations of the consumers are ever changing, hence requiring organizations to be more inclusive, open, and transparent in their decision-making process. While at the same time, there is an urgency on environmental sustainability brought forth due to negative effects of climate change that has brought sharp focus on how organizations carry out their functions and other products and services. The last driver, in my view, and perhaps more related to today's theme, is the impact of digital technology. In this realm of change, digital technologies are of special interest because they continue to have a profound and rapid impact on markets and on the way economic activities take form.
Hi guys. What does it take to run a business that succeeds?
What does an entrepreneur need to do for his business to scale up and outgrow his dreams?
What does a CEO need to know to make a decision?
What exactly makes the stocks move up and down?
Strategy, insights, innovation, growth, leadership, analysis. In an economy that's fast-moving, we are ahead of the game. Armed with data and analysis, we delve deep into the numbers that count, with analysis on key sector and company performance. Join me, Terry Anchebet, on the first of its kind in East Africa, a show that unpacks industries, speaks to business leaders, decision makers, the movers and shakers who steer our economy. The Capital Point, at this time only on Metropol TV.
approximately 90% of Kenyans have access to the internet, with the majority being connected via their mobile devices. This presents great opportunities to leverage technology, particularly video technology, to fast-track delivery of services to people and communities that need them the most. Furthermore, this potential can be multiplied with the use of video compression standards that make it possible for individuals to record videos in such a way that they take up less memory space and use less bandwidth. As such, compression standards have the potential to improve service delivery in almost every sector and make a difference in people's lives, ranging from education, healthcare, agriculture, security, governance, among others. Ladies and gentlemen, as the government body responsible for the provision of standards and conformity assessment, we pride ourselves at KEBS in providing standard-based solutions that promote innovation, trade, and quality of life. Ladies and gents, in a fast-paced world, we cannot underestimate the role that standards play to any developing nation. We acknowledge that standards are important tools of trade. Standards greatly help in promoting innovation and giving entrepreneurs a competitive advantage. Research has shown that implementations of standards increases national
issue. We've really traversed this country. So, ladies and gentlemen, we recognize the critical role that the internet in particular and ICTs in general play in Kenya's social-economic transformation. More importantly, we do recognize the transformative role that ICTs are playing in the realization of very ambitious goals that have been set in this nation through Vision 2030, the Big Four agenda, and the digital economy blueprint. This is why the security of our cyberspace is then very paramount, because if we have to achieve these objectives, then our space must be secure. It is important as well in consolidating and sustaining the gains that we have realized in ICTs so far. And as we all know, that Kenya continues to take a leadership position in the conversations that touch on ICTs, technology, integration of ICTs in solving some of our daily problems. You cannot today have a conversation around those topics and not touch on the Kenyan experience, which we are all very proud of. Globally, cyber risks and threats are continually evolving. Cyber criminals as well are continuously evolving and perfecting their schemes to target individuals and organizations for financial reasons, social and political gain, and Kenya is by no means an exception. During the 2018-19 fiscal year alone, the National Computer Incident Response Team, what we popularly call the KSAT, hosted by the authority, detected 52 million cyber attacks on the critical infrastructure in Kenya. And I would just like to set context and say that as we talk about 52 this year, last year it stood at 26. So you can see the growth is by 100 percentile increase. And this is perhaps only going to deepen as we continue to rely on the ICT platform for delivery of services. So what does this mean to us? It simply confirms a few things, that ICTs are evolving, they're moving from the edges of our lives and businesses and coming to the center of our lives. This is evolving new business models. It's also telling us that data is just no longer data for the sake of it. It's telling us that data is now capable of generating such useful information, that data is a game changer, it's gaining new value, and because of that, data is now what has become the most valuable resource in the world today. This explains why corporates are now grappling with unprecedented changes, sophisticated and targeted cyber attacks. And most of these attacks involve malware, phishing, and continue to expose data and assets of institutions, governments, and individuals to constant risk. This situation obviously then calls for a paradigm shift in how organizations model their security strategies in a manner that gives increased priority to the security of their ICT ecosystems. If not well protected, they stare at the huge risk of reputational damage, operational downtime, and massive recovery costs that are associated with cyber attacks. And this relates to firms, irrespective of size. They must develop a security culture. Firms must ensure that they are entrenched, that security of the cyber systems is entrenched within the organization. Ladies and gentlemen, there is a growing concern that cyber criminals are also targeting individuals who are the weakest link in the digital value chain. Such threats include malware directed at mobile devices for distribution of ransomware, spyware, and viruses. This vulnerability is mainly fueled by a proliferation of applications from third parties that we find available within the various application stores in our phones. Cyber extortion, identity theft, impersonation, and other forms of online abuse are now commonplace. These have been attributed to the low levels of cyber awareness and poor cyber hygiene practices. So indeed, as we were told, each and every one of us, you and I, are a key ingredient in ensuring that we are in a cyber secure space. This is the reason that Communications Authority is focused on boosting trust and confidence in the use of electronic transactions in cyberspace. This will also promote and facilitate the efficient management of critical internet resources. We undertake this responsibility through collaboration within the national framework established for cybersecurity, the provision of support for investigations and prosecution of cyber crime offenses. Additionally, the authority has put in place various initiatives to build technical cybersecurity capacity. Through cyber awareness and improvement of the overall cyber hygiene practices of the Kenyan population, we believe that this is achievable. We do have initiatives that I'm sure many of you have interacted with, such as the Child Online Protection Campaign. We continue to create awareness among stakeholders on how to secure children in the digital space. We have also recently embarked on monthly cybersecurity fireside chats and county cyber clinics as part of the array of platforms geared towards building the capacity of the various constituents in the cybersecurity value chain. Ladies and gentlemen, the authority is alive to the fluid nature of cybersecurity concerns and the growing need to continually engage with other stakeholders within this very critical and fast-evolving ecosystem. This is the reason why we continue to develop and nurture mutually beneficial relationships with local and international cybersecurity actors. I hasten to add that it has greatly enhanced our capacities in cyber threat detection, investigation, and response. We have also taken a multi-stakeholder approach in safeguarding security in our cyberspace. This is a critical element, and this has continued to enable an environment of increased information sharing between government and other players, both locally and globally. Our national KE-SAT has a very good working relationship with financial institutions, telecom operators, academia, and critical information infrastructure providers. Others are public service providers for utilities, content service providers, and domain name registry service providers, among others, because we realize as an ecosystem, we continue to evolve, we continue to share information, and we all need to build capacity together. There is no doubt, therefore, that we can only achieve meaningful progress in tackling cybersecurity if we collaborate and communicate amongst ourselves. This conference, for instance, is a manifestation of the close relationship that the authority has with the rest of the cybersecurity fraternity. It has brought together cybersecurity experts from far and wide to share ideas on emerging cybersecurity issues. The authority found it worthwhile to also hold a hackathon session alongside this conference. Through this initiative, we hope to provide local innovators with a chance to showcase their technical skills. I am convinced security challenges that we do have. And since we do have the fame of developing solutions and exporting them, I do trust that this, once more, will be a platform which will provide opportunity for recognition of some of these innovators and also allow for scalability and monetization of the solutions that we will find. The participants in the hackathon are students from 10 institutions of higher learning. I would like to take this opportunity to request the hackers to be upstanding wherever they're seated in this hall. The hackers, the ethical hackers. But our chief guest, PS, you see these are young, some of our best and brightest, and these are students from 10 institutions: Strathmore University, Meru University of Science and Technology, University of Nairobi, the Presidential Digital Talent Platform Program, Kisii University, the Kenya College of Accountancy, Kenyatta University, Jomo Kenyatta University of Agriculture and Technology, Jaramogi Oginga Odinga University of Science and Technology, and the Technical University of Mombasa. Let's give them a clap. You may be seated. For the next 24 hours, these students will be engaging their minds and skills to develop cybersecurity solutions. We wait with bated breath to award the winning team on Friday, and we wish you all the best. This conference heralds a new dawn in the development of innovative cyber solutions that will drive the national and ultimately the global development agenda. Looking at the mix of participants, we are bound to have engaging and active discussions. Allow me to thank you all once again for joining us at this National Cybersecurity Conference. At this point, let me welcome Mr. Ngene Gituko, the Chairman of the Board of Directors of the Communications Authority of Kenya, to give us a few remarks. Thank you very much for your attention.
Thank you. Thank you, Mercy. The PS, Jerome Ochieng, Principal Secretary, State Department of ICT and Innovation in the Ministry of ICT, who is representing Dr. Fred Matiang'i, CS Interior and Coordination of National Government, Juliana Yapan, Secretary of Administration in the Ministry of ICT, Mercy Wajau, Acting DG at CA, all invited guests, conference participants, good morning. Good morning.
Good morning.
Yeah, that's better. Let me start by saying how delighted I am to join the local ICT fraternity as we mark this year's Global Cybersecurity Awareness Month. It is, of course, heartening to see stakeholders from both the local and international entities engage on emerging cybersecurity issues. This is a very important subject in the industry dialogue, and we therefore value your presence here to join in the discussions. At your 3 days, country matters of cybersecurity, not only but also Kenya has in the recent past made massive strides in the ICT sector, and I am sure we cannot attest to the fact that we stand shoulder to shoulder with the developed markets around the globe in the areas ICT. However, as technology adoption continues to drive business innovation and growth in Kenya, we are also increasingly getting exposed to new and emerging technology threats. ICT infrastructure has become the target of many cyber criminals, considering the increasing value of information therein. As a country, we are dependent on this infrastructure, with many services having moved online. In the recent years, our ICT infrastructure has undergone a dramatic transformation. The growth in the use of systems and networks to connect various organizations has made it relatively easy to obtain information, to communicate, and to control these systems across great distances. We look around, virtually every sector in Kenya relies on this critical infrastructure. It is well known that the government has singled out ICT as a key enabler of Kenya's socio-economic transformation and the realization of our Vision 2030, as well as the Big Four agenda. Cyberspace lies at the heart of modern society, impacting personal lives, businesses, and the delivery of essential government services. This revolution in connectivity and interdependence has increased the potential for harm, making it possible for malicious agents to penetrate millions of computers. A secure cyber environment is essential to efficient service delivery as we transition towards being a digital economy and the provision of services to the Kenyan people through the digital platform. Cybersecurity therefore requires supportive strategies, and currently Kenya's cybersecurity readiness and resilience faces challenges such as the inadequate human resource capacity, creation of sector-specific computer incident response teams, as well as low detection of cyber threats and lack of analysis and investigation capabilities. We must all do what we can to boost our capacity to handle cyber threats and cybercrime if we are to truly remain abreast in the dynamic, rapidly evolving cyber environment. I would therefore urge all of us to take advantage of the opportunity to exchange ideas and knowledge in this conference in order to build your capacity as a country and innovate solutions to the cyber challenges we are facing today. We also do recognize that no one entity can control every aspect of cybersecurity,